5 tips for first-time homebuyers workshop webinar. So I just want to make sure that all my guest speakers are on and can see my screen. Mary, Michelle, Doc, are you guys all on?
Indeed.
I'm on. Yes, I'm here.
Awesome. And you can all see my screen. Perfect.
Hello, hello, and welcome to the 5 Tips Every First-Time Homebuyer Should Know workshop. Thank you for joining the call today. Everyone will be muted because we have a lot of information to share in a quick time, but I will open it up for questions at the end of the presentation. So I decided to have a workshop because I talk to a lot of people who are renting, and they all say the same thing. I'm tired of renting and I want to buy a home. And you know, I feel your pain. I feel their pain. I know how frustrating it is. I was a renter for years before I bought my own home 9 years ago. I remember it like it was yesterday. They started building new homes near my apartment complex on the weekends. And I would drive by, sometimes go in, and dream that one day I would own a home like that. And I do. It's also a great time to buy a home. The National Association of Realtors reports strong numbers for the Affordability Index. The Affordability Index, if you don't know, measures whether or not a typical family could qualify for a mortgage loan on a typical home. So anything over 100 is positive, so that means it's a good market to be a homeowner. And for some, it's a process, and there's nothing wrong with that. So this brings me to mind of one of my past clients who called me in April. She was working on her credit, and I think she was working with a credit restoration company, but told me she'd be ready to buy in a couple of months. So I checked back with her every so often, and on one call, it was in August, she excitedly said, I'm ready to buy. And I could tell she was smiling hard on the other end of the phone, which made me smile too. But, it's obvious that she had the mind shift from, I want to own a home to I will own a home. And that mind shift had to have set a goal that put her on a path to home ownership. And from working with me and my team, she was able to achieve her goal. She actually closed her first home in September of this year. So what's holding you back from obtaining home ownership? Credit, money, not sure how to get started? Well, you are at the right place right now. A little bit about me. I graduated from the University of Arlington and worked for corporate America for 13 years. I earned my real estate license having 10 years in the real estate profession. I've been blessed to help hundreds of families sell millions of real estate each year. My specialty is serving buyers, sellers, and investors. And you can always call or text me at 972-827-7589, and I would be happy to help you create your path to home ownership. So whatever your reasons for buying a home, you must first believe that it's possible, because you most certainly can. I have my team of experts here today that I currently do business with, who are here to give you the best 5 tips to help you plan your goal for home ownership. Also, for those of you that stay to the end of the webinar, I have a free gift for you. So make sure to take notes, because what you'll learn today is valuable information that will take the stress and confusion out of the process for you and your family. You'll learn Credit Repair by Doc Compton, Financing and Mortgage by Michelle Creech, Working with the Title Company by Mary Martinez, and Find Your Dream Home by me. Awesome. So now the first speaker is the owner of Omega Credit Repair, and I have a quick story about my experiences of working with Doc. I signed up for his credit repair services 2 years ago, and I did everything his team told me to do. Well, as a result, last year I purchased my dream car with a very low interest rate and 0 down. Like, I was literally able to walk on the car lot and pick out the car that I wanted. I'm very happy with it, and this would not have been possible without the services of Doc and his team. So now, without further delay, I would like to welcome Doc Compton. Doc?
Hi, I am. How are you?
I'm doing good. I'm doing good. Thank you.
Good.
Go ahead and tell us a little bit about your services.
Well, I mean, it's hard to follow a glowing review like the one you just gave me, obviously. But essentially, I've been doing consumer credit for a really long time. I hate to even date myself, but it's about going on 23 years now. I started doing it for the same reason that a lot of people in my industry did, and that is I needed it. And back then, it wasn't at all like it is today, where you have credit repair companies on every corner. Back then, the only people that were really doing any manner of credit repair were attorneys, for the most part. And of course, they were they were very expensive. And needless to say, because I had bad credit, expensive didn't really work either. I went to college like a lot of people do. Found a couple of credit cards in my mailbox the day I got there, and we all know how that story ends. Dumb college kid with very little in the way of financial literacy, and got myself into quite a bind. And when it was all said and done, and I was out of college, couldn't get a car, couldn't get an apartment, certainly couldn't get a home. So I began the process and did it for a long time, more as a side business than anything, friends and family, exclusively referral, and so on. And then in 2004, made it my full-time occupation, and I've never looked back ever since. I've spoken all over the country, huge events, small events. I've done all kinds of stuff for groups, real estate groups, investment groups, and of course consumer groups. Great time to cough in a radio interview, huh? I had my own television show, had a couple different radio shows, FM radio shows, and then online as well. And now I focused my efforts almost entirely on education, teaching people around the country and so on. Just come out with a new book that's kind of a little bit about what I'm going to talk about today, and that's how to get credit ready in 5 simple steps. The biggest mistake that I think people make is the fact that they try to do it at the last minute. Everybody wants to move in the summer, so they start looking online around January after they get the holidays behind them and so on. Then they get a little more serious toward late January, early February. They might even call a realtor. Well, of course, the first thing that the realtor asks is, are you pre-qualified? Have you spoken with a mortgage lender yet? If not, they get them to the lender. Lender pulls the credit. Now we're talking it's March, maybe April. These people want to move in May or June. They've only got a couple of months to shore everything up in anticipation of that move or that purchase. Excuse me. And what I wanted to do was kind of lay out a game plan where people could start several months in advance of a major finance purchase and help them qualify for more, and save money all the way around, and take the money and either pay off the mortgage sooner or invest it in a college savings plan or other types of investments. First and foremost, the thing that people simply need to do first is just get the reports. Get your credit reports from Experian, Equifax, and TransUnion. There's a number of different ways that you can get it. You can write each of the bureaus, send them a copy of your driver's license, your social security card, and a utility bill or bank statement that shows your current address. They'll send you a free copy once per 12 months. Okay? You can also go online to any number of different credit report scores and monitoring services. I recommend the website creditgecko.com. There's a lot of products there that are really, really good for just getting your reports. The second step, and this is a difficult one for a lot of people, is actually reading and understanding the information that's on their reports. Yes, everybody knows, collections are bad, late payments are bad, high balances, and so on. But what I really want people to do is to take a little extra time and study the different elements of each type of account that's on their credit report, figure out if it's complete accurate, and timely, because those are the three standards by which the information on your credit reports is judged. If information on your credit reports, any of the information, whether it's addresses or other personal information, obviously account information, public records, things like judgments, liens, bankruptcies, all of those things are subject to those same criteria. And if that information, regardless of what it is, doesn't meet those criteria, it needs to be corrected or removed. And the sooner you start that process, the more time you give yourself to do it, the better off you're going to be. Which brings me to the third step, which is correct any errors that you find. Well, some of it's going to be very obvious. Things like, hey, my name is Doc Compton. My name is not Doug Compton. Well, why is that a big deal? Even though it doesn't impact your score, there may be accounts attached to that name, Doug Compton, that aren't yours. And it's not at all unlikely that those accounts would be negative. In fact, it's a 50-50 chance that they're negative. And if that's the case, well, you may have negative information that's hurting your scores, that can either completely preclude you from being able to get a mortgage, or is going to put you in a position where you have to accept a lower rate or terms or whatever on that same mortgage. Other things, collection accounts. Everybody's seen it happen. You've got pull your report, and it's like, what is this collection for $75? I don't know what this is. Well, you trace it, and it's actually to a medical bill. Well, sometimes those medical bills are legit, but a lot of times those medical bills are actually something that is a clerical error. The insurance company paid the doctor late. The doctor sold it to a collection agency in the meantime, and the collection agency is now trying to collect on a bill that was actually paid by insurance a year or 2 years prior. If you know that, and if you keep good records on your finances, it's typically pretty easy to demonstrate that those things shouldn't be there in the first place. And having those things removed will obviously impact your score very, very positively. Generally speaking, yes, I'm in the credit repair restoration business. People say, I can do this myself. Absolutely you can. You can give yourself stitches too. You can represent yourself in a murder trial. You can mow your own yard. You can change your own oil. I've tried a couple of those and not done them, at least not very well. There is something to be said for having expert help. That's where the information, the tips and techniques and things we've acquired over the last 2 decades can really be valuable. Plus just the time factor itself, especially if you're kind of under the gun and on a timeline. Now, the next step is a lot of times people will come to the mortgage lender and not have credit. They won't have a revolving account, for example, or a credit card. Well, there's a lot of lenders these days who simply won't give you a mortgage loan if you haven't demonstrated an ability to repay and effectively manage the credit that you have on your credit report. So if you don't have credit, it's important to go out and get some. Now, one of the easiest, fastest ways to do that is with a secured credit card. Now, I mentioned a little while ago CreditGecko.com. CreditGecko also offers secured credit cards. And for those that don't understand what a secured credit card is, basically you give money anywhere from $200 up to $10,000 to the issuing bank as a security deposit. They will then give you a credit card that functions like any other credit card, bills monthly and so on and so on. You can use it to buy things online or buy gas or go to the grocery store with it. And they use that security deposit as protection in case you default. If you don't pay on your credit card, then they'll just keep that security deposit or keep whatever portion of it you actually owe the bank. It's one of the fastest ways to build a credit profile for those that don't have it. This is especially good for students coming out of school and so on and so forth. They do take generally somewhere between 30 and 60 days to report for the first time though. And again, if you're starting this process, you know you don't have you don't have to look at your credit report to know that you don't have a credit card. So go ahead and get one even before you get your report. Go online, get a secured credit card. That way in a couple of months it's going to be there. The next step, and this is critical, specifically with these credit cards, is you want to manage the credit that you have. You want to manage it effectively and intelligently. You want to pay on time. I know that's obvious, but if it were that obvious, I wouldn't have a job because people don't do it. You want to keep the balances on your credit cards in particular very, very low. You don't want to go out and make a ton of inquiries into your credit. Don't go car shopping right before you're going to purchase a home. Don't go and look for furniture for the home you haven't bought yet. It happens all the time. You want to make certain that any loans that you do have, you continue to pay on a regular schedule. Okay? Don't let yourself get behind, particularly if you are anticipating a purchase in the next 12 months, because a lot of lenders, even a single late payment, will keep you out of certain types of mortgages that are really, really good, particularly for first-time home buyers. So again, to review, first step, get your reports. Then read, learn to understand what's on your report. You're going to want to correct any of the errors that you find on your report, establish credit if you need to, and manage what you have and do so effectively.
Awesome. That is all great information, everything that you shared. I agree with you 100% that the biggest mistake is trying to do it all last minute. This is actually the very first step in the process is getting credit ready. So great information. Thank you so much for sharing, Doc. I appreciate it.
Absolutely. Glad to help.
I'm working with a buyer right now, and when we started the search, he wasn't really pleased with the types of homes that were available within his approval range. So he actually took advantage of step number 5 by managing the credit he had. I think he paid a few things off that he could and was able to increase his limit, and he's actually closing on his first home on Tuesday. So everything you're saying is true and very valuable.
Good, I'm glad.
Okay. Awesome. So if you like the information that's being shared so far, stay until the end of the webinar. I have something special for you, so stay tuned. Our next speaker is Miss Michelle Creech. Michelle and I just closed a deal a couple of weeks ago, and she and her team are the best. Hi, Michelle. Thank you for joining. Are you there? Michelle, are you there?
Yes, ma'am, I'm here. How are you?
Awesome. I'm great. Thank you so much for joining. And if I recall, this deal, it was STALCUP, and the buyer in the transaction actually used down payment assistance. Do you remember that?
Yes, I do. Yes, they use the Fort Worth Housing Down Payment Assistance Program.
Awesome. All righty. Go right ahead and tell us a little bit about what you do.
Basically, I am a mortgage banker. I've been in the industry going on 17 years, specialized in all programs, FHA, VA, conventional, rural housing, also known as USDA loans, and deal a lot with first-time home buyers. With the first-time home buyers, there's so many options we have. I sit down with them, go over so many things with them. It's a lot whenever you're buying a home, especially for the first time. And you just don't understand the different requirements and money that's required. And there's a lot of things out there to help everyone, even if you're not a first-time home buyer. Down payment assistance programs vary from city all across the Metroplex. Basically, with the down payment assistance, FHA is usually the product and program you're going to use. So as you see here on this slide, I have here different products with City of Fort Worth. That's the one that we used with our recent buyer. We just closed, Carla, and she was able to get up to about $5,000 worth of assistance. So you see here they give you up to $14,999. Just kind of depends on different options with that. on how much money they can actually get from the down payment assistance program. Located in the city of Fort Worth, there are income requirements with your down payment assistance programs. You'll see that on every single one of them, along with what's called debt to income ratio as well. So that basically means just how much money you make each month compared to your debts that you pay out. All of them do require a HUD-approved homebuyer course. There are a lot of them out there. There's online features. You can actually meet in person with them at no cost. And it's a great start as well as a homebuyer, and I definitely recommend it for everyone. You'll see that there's also, too, the SEF program that's available in the area around, with the exception of Grand Prairie. And I'll go into more in detail why, not in the city of Grand Prairie. But this one gives you grants up to 3 to 6%. So it helps you, if you have your 3.5% down on FHA, but you need some help with some closing costs, you're able to use that with the SEF program as well. Again, it has down payment or max debt to income ratio requirements and income limits as well. And you do have to take a homebuyer approved course. The reason why Grand Prairie is because they have their own, which is buying power. Has stayed in the city of Grand Prairie. It gives up to $5,000 as well, and it does that income limits as well as the homebuyer course. So usually your down payment assistance programs are used with your FHA product. Your FHA is a very, very popular program, especially for first-time home buyers, but for all buyers in general. Just requires just 3.5% down. You do have mortgage insurance that's in your monthly payment each month along with your taxes and insurance. But it's a great program, and it's geared towards people who have mid-credit scores. About 640 is required for FHA. Sometimes we can go down to 600, just kind of depends on the situation. As Doc was saying, we will look at your credit. If somebody has limited credit, we can possibly do something if they have generated a score. So there's several different things we can look into depending on the home buyer themselves. So we see the slide here with the slide with FHA. Basically, it's a government-backed program. Like I said before, just with a minimum payment of 3.5% down.
Okay, awesome. And can you share with us some of the benefits for having an FHA loan?
It's one of the programs, with the exception of a VA loan, that has the lowest down payment requirement of that 3.5%. Your funds for closing, you can either get a gift from a family member, you can pull from your 401k, or you can, if sellers are in the market of paying for closing costs, ask for assistance. But you have to come out of pocket no matter what with your minimum down payment of 3.5% of the sales price of the loan. Basically, your FHA, we are an FHA-approved lender. I've been doing FHA loans for over 17 years now. On the two-part mortgage insurance is included in your payment each month, and that's due because you just put the minimum of the 3.5% down. If on FHA you put at least 5% down, because you're like, I want to be able to pay more towards my principal and eliminate that mortgage insurance. If you put at least 5% down on FHA, that mortgage insurance will go away after the first 11 years once you receive 20% equity. So that's another option that we can look into and kind of look at your financial background to see what will help you in the long term of the loan.
Awesome. And so have you found in your experience that some buyers are able to borrow and get cash for repairs with some FHA loans?
That is another FHA loan. It's called a 203K Streamline is usually what that is. And that's like to restructure if there's any kind of not major repairs. So that's okay. A little bit different than your regular FHA, your 203B that we use on first-time home buyers. But it is available, yes.
Excellent. And I have an FHA loan myself, and what I really like about it when I talk to my clients is that they offer a financial hardship if you find that you suffered a financial hardship and struggling to make payments. The mortgage companies have some flexibility to work with you and help you get back on track. So I really like that.
Oh, yes.
Mm-hmm.
Oh, yes, very much so. If you feel like at any point, just contact your lender. They'll work something out. They want you to stay in the home. So they're whatever your situation is, just give them a call and see what they can do to help you out.
Yep, awesome. That's a benefit for FHA. And now we'll go to conventional, which is also another loan type.
Yes, conventional loans do require a little bit more down payment. The minimum down on conventional is 5% for the down payment. On the borrower's credit score, usually it's a little bit higher on conventional than it is on FHA for the requirement. Usually you want about a 660 or above for the mid-FICO score. And that's basically, we take the 3 scores when you qualify for a mortgage, and out of those 3 scores, we just take the middle score, and that's what we go off of. That's what we call the mid score. Like I said, down payment is 5% down, and the debt-to-income ratio is usually required on conventional about 45% on the back end. And basically what that means is if you pay all your bills every single month, you have to at least have 45% of your money left over, okay? And one of the main things about that is the reason why I brought that guideline is the mortgage insurance companies require that. So not only does conventional, but the mortgage insurance companies would want that back-end ratio not to exceed about 45%. With the conventional, there's a little bit more stability that is required on the loan. You have a little bit higher credit score. You have your 5% down, so you have more money down. And then on the mortgage insurance, of course, looking at the ratios compared to FHA does not.
Awesome. So just using an example, if someone wants to buy a house and the house is priced at about $165,000, and they decided or they qualified for FHA, what would that loan look like?
Basically, at 165 sales price, you required your minimum down of 3.5% down. So that's going to be about $5,775 for your down payment. With FHA, you have what's called a loan amount and a full loan amount. So your base loan amount is going to be of course, your sales price minus your down payment. And then your full loan amount is going to be what's called the mortgage insurance premium, the upfront mortgage insurance premium. That's required on all FHA loans. But it's actually financed into the loan. If you're looking at a 30-year term with your estimated taxes and insurance on 165, you're looking basically at a minimum payment each month. And, of course, we're just estimating the taxes and insurance. Of course, once I say this, my computer's running slow and not opening up that page.
That's okay.
I do apologize. You're looking around $1,358 a month is your estimated mortgage payment on 165 sales price on an FHA loan.
Excellent. So that's a great example of why everyone loves FHA there. And how would that look with a conventional loan?
With the conventional loan, on a 30-year fixed rate, you're basically still looking at the 5% down. So you have a little less that you're actually be financing. You don't have the upfront mortgage insurance premium that's required on FHA, okay, with that. So it kind of helps a little bit there. The mortgage insurance and the monthly payment is going to vary. It depends on what your credit scores are and what your debt-to-income ratio is. So it's going to be kind of a factor. We're just going to have to look on case by case on that. So
Sure.
If you're looking on a conventional with 5% down, you're looking around $1,340 a month for your estimated payment on a 165, and that's including with the 5% down.
Wonderful. Thank you so much, Michelle, for sharing that, explaining that information out. That's definitely going to help make everything clear as far as the financing is concerned. I know that a lot of people have questions about the differences between conventional and FHA, so I definitely appreciate you sharing that out. Now, if someone wanted to apply for a mortgage, what do they need to apply? Have available?
Well, basically, this first step is we have to pull credit. We look at the credit report first. We look at all options, review that report with them. If you're ready to take the next step, then we will send them what's called a documentation checklist, and that will include your most recent 30 days of pay stubs, bank statements, W-2s and tax returns for the last 2 years. So we can review everything in general because we want to make sure that everything is correct up front, looking at income, looking at the taxes to make sure there's no hiccups later on in the loan process.
Excellent. Thank you so much. Is there anything else you'd like for buyers to know when applying for a mortgage?
Exactly what Doc was saying. Just, don't go out and buy a lot of stuff at the very beginning. Make sure that you are responsible enough to make sure every single payment's made on time. After you start the loan process, one of the biggest things is people think, I'm going to go shop for some furniture. Just be aware that you're purchasing, try to keep everything exactly how it was when you made loan application with your loan officer.
Right. Great. I agree with you 100%. Thank you so much, Michelle.
All right. You're welcome.
All right. So moving forward, next we have Mary Martinez, who is an escrow officer for Independent Title. I've worked with Mary for over 5 years. I mean, she is the best escrow officer in the Dallas-Fort Worth area. I will go down. You can mark my words on that. I always have her back. Hi, Mary. Thanks for taking the time to speak with us. Are you there?
Yes,
Awesome.
I'm here. Thank you for those nice words.
You're welcome. So explain to us what's contract to closing.
Okay. For us as a title company, the biggest thing for us is with any buyer or seller, but most of the time, first-time home buyers, I know they get really nervous, want to call every day and figure out what's going on. So at the beginning, we'll usually ask if they are first-time home buyers and send them out a first-time home buyer package, which kind of walks them through the entire process. This form is one of them, and it's just a simple layout of what to kind of expect in between everything, going on. And so they have a little bit of a guideline to follow as they're going through it. And I seem to kind of see a lot of people get a little bit more comfortable if they have something in hand showing them what to expect. For us, we are a neutral third party, so we don't represent seller or the buyer, and I know that sometimes they get a little bit nervous about that as well. But the way I explain it to them is that basically we're here to make sure that the contract is followed, that their title is clear, explain what the title benefits them for, and also just be a backup for the realtors and the loan officers and everything else. When we get the contract at the very beginning, after the contracts are signed and we get the earnest money with the contract, we'll kind of go over it a little bit with them, but we will receipt it and show them a receipt of their earnest money, which if the contract goes to closing, they get credited back to them at closing. Once we receipt it and everything, I will get it turned in, start title work on it. They will get a welcome letter along with forms, whether they're a buyer or seller. They'll get a buyer information letter, which will ask them who their loan officer is, identification up front, anything that they are to pay on the contract. We go ahead and get it all out of the way at the beginning. Then once we get all the forms back, the title, all the forms back and everything, we start working on it. While we're working the front part of it, just kind of collecting all of the information, our title department, which now gets the order and starts examining it, will start running name searches, title searches, to see what liens are on there. We just want to make sure that this new buyer or any buyer is coming in with a clean title at the beginning. Once we receive that title search back is when we'll usually send it all out. If it's all clear and everything, we'll get it all sent out to everybody, the loan officer, the real estate agent, and just gear up for closing, really. If there's any issues within that title, that's also about the time that we'll start clearing anything. Talking with the seller, talking with the buyer. Again, loan officer and realtor, we have to stay in communication with everybody just to kind of make sure everything flows. Once the commitment's released and cleared and everything, we leave it up to the lender and the realtor at that point to make sure everything on, as we have underwriters, so do lenders, and so we just kind of try to help each other out, get to the closing table. and get the buyer to the closing table, that's usually when we'll call and schedule it. Even if it's a couple weeks out and we're ready to go, we'll call them and schedule it and prepare them for closing day. Let them know what they have to bring to closing, which is usually a passport or government identification. Let them know that we will need a cashier's check or a wire. And most of the time we like to verify with the lender what account it needs to come from if that buyer has more than one account. Usually the lender likes to see it all, from what I understand, come from one account. And then once we get to the closing table, we just walk them through all the documents and just kind of go through everything, the whole process, explain to them again what title insurance is, that they can call us. If they have any questions, once everything is closed, we'll go ahead and send everything over to the lender for approval and authorization, and then, of course, let them know that, if they're funded or not, if they're ready to move in and hand over keys. That's about what we do.
Awesome, and that's a lot. That is
It is.
So share a little bit about your experience. How long have you been in the business?
I've been in title for about 17 years. I started extremely young. And title, real estate in general, you either really love or you really hate. There's no in between. But I fell in love with real estate about 17 years ago and decided to stay at it. I'm a teaching title company is what I like to tell people. So whether it's a new buyer, first-time seller, investor, I love to sit there and just kind of walk them through the process and explain everything to them. Having bought and sold a couple homes myself, I know it's nerve-wracking. Even as a title agent buying a home, I was nervous, and I know the process. But it still made me nervous, and, I think it just helps everyone in general to have somebody there that they can call or email and for any question that they may have.
Yes, I agree with you 100%. I love that's why I love having you on my team. You take a very complicated situation and make it very easy for my clients, and they've all been very pleased with you. So thank you so much for sharing your information. I definitely appreciate it.
You're definitely welcome, and I appreciate it all the time.
All righty. So we are sharing some great information today. So for those of you that have questions, we will have a Q&A at the end of the webinar, so don't forget your question. If you want, you can text your question to 972-827-7589. That's 972-827-7589. Okay, so let's take a look quickly at the entire process of buying a home. Number one, you're going to prepare to shop. So the family needs to be in agreement on buying the home. So this is a great time for you to write down the most important things you want in a home. For example, if your kids are in a school district and that's important that you don't want to move them from that school district, then write down the ISD. That's one of the top 5 things that the home and location need to have. So those are things that you want to consider during this time. Also, this is the perfect time to follow Doc's advice and check your credit. Give them a call. Go to Mega Credit and let them know what you plan to do, and so they can help you start the process. They can let you know where you stand. This is definitely a must-do before you request financing. So the next step is actually getting your financing. Give Michelle a call. Let her know that you are ready, you're ready to buy, and give her all the information that she needs to get you pre-qualified. Next step is hire me as your realtor. I can help you with any resources that you need. At this point, I'm going to sit down and talk with you about the properties that you want to buy, what area, what price range, and we'll get your search created so that your next step is finding a property, going to look at homes and starting the property search. Then once you find a house that you like, you make an offer. This is what I'll be helping you with. We'll be looking at home value in the area and making a good solid offer to get you the home that you want. Negotiating is the part of the process that I'm best of, I might say, and I love to do. I love to negotiate to get my clients what they want. So this is an important part. So that's why it's so important for me as your agent to know exactly what you need. So when it comes to the negotiations part, I can make sure that you're getting the best deal. Then we move to closing, and that's where Mary kind of explained to us what the process, all it goes entails with the closing, that we work with the title company and the lender to get everything in place for you. And then the final step is moving in, and that's party time. That's when you get to enjoy, you and your family get to enjoy your new home. So just a quick review for 5 best tips. So number 1, you want to change your mindset to maybe I can own a home to yes, I can own a home. 2, get credit ready. Call Doc. Let him know you're ready to get started. Build your strong credit. Number 3, just give me a call. I work closely with custom builders. I know the holiday specials. I know the incentives being offered and how to get you those incentives. So if you have, and also if you have a home that you need to sell and use the proceeds to buy another home, I have experience with that process as well, and I'm very familiar with setting up that type of transaction. Mary and I work very closely together to make sure that
you are now muted.
Let me know what you need. Number 4, get your financing in place. Call Michelle, get pre-qualified. But I also want to let you know there's also other out-of-pocket expenses that you need to be prepared to pay. Earnest money. This is an earnest money payment. It's in a specific form of security deposit paid to open escrow at the title company. It tells the seller that you're a committed buyer, and it helps fund your down payment. Also, you'll want to pay option money. This option fee is money paid by the buyer for the option to terminate a real estate contract with an agreed time period. So this gives you time to complete your due diligence and order an inspection. And then you want to be ready to pay for an inspection. It's paid at the time of service. So those are some things that you want to consider when looking for a home that are out-of-pocket expenses. Number 5, aggressively search for homes. We're going to start looking for homes. We're going to reach out to when you find a home that you like, we reach out to Mary. She gives us an estimate of closing costs. She's awesome. Not all title companies will do that for you, but Mary will. And then that way you know kind of what you're looking at when you get a contract accepted. So see, you already have your power team in place and available and ready to help you. So wow, I know that's a lot of information in a short period of time. So what I'm going to do is open it up for questions.
You are now unmuted.
So anyone who's on the call have any questions? Okay, so while we have some folks who it looks like are typing in a few questions, and I'm actually getting a few text messages from people I know that are on the call. They're texting my phone, which is okay. But while I get those together, Doc, Michelle, or Mary, do you have anything additional you'd like to say?
Well, I say the biggest thing is there's no substitute for professional help in any aspect of the finding a home or actually executing the purchase. There's simply no substitute for competent professional help.
Okay, thanks, Doc. And I just got a question here from Mike. How long is the process from start to finish? And I guess that's a good question. I guess the start question would be for Doc when you check your credit, and if you have some things that you need to maybe correct, about how long would you say it takes to do that?
Well, it's a little bit dependent upon individual situations. Some people come to us and they have one thing and that needs to be addressed, and that one thing is a very, very simple thing, and it may only take a couple of weeks. Then there's other people that come to us and it's an absolute disaster area on their credit report, and it's going to take a little bit of effort on our part, a little bit of effort on their part, and perhaps some help from the mortgage lender. and that can take a little bit more time. The key is, people ask all the time, how long does it take you to figure out if somebody's a good client or not? I can look at a credit report in about a minute and tell you if someone is a good candidate. What we're looking for is not necessarily specific types of account information so much as the specific companies, because there's certain companies that I know unequivocally are absolutely positively not going anywhere. Simply because the company has made it a policy never to get rid of information within, except in the event that you actually sue them to go after it. And I've actually been a party to those kinds of lawsuits. Then there's other companies that I know that just as a part of their business model, they simply, the minute you question anything, they just let it go. So what I'm looking for when I evaluate a credit report is which of those accounts exist on the credit report. If it's a whole bunch of people that are accounts that are going to be very, very easy to fix and I'm going to be able to do it very, very quickly, then that's exactly what I'm going to tell somebody. If, however, I'm looking at it and I either think that it's going to be a very long process or they're just not a good candidate, then I'm not afraid to tell people that as well. I actually wrote an article about a year ago talking about my longevity in this business being largely credited to the fact that I'm not afraid to tell people they're not good candidates. I don't just take everybody's money simply because I want their money. If somebody's not a good candidate, I'm doing them quite a disservice by taking them on as a client. And the question that a lot of people have about who's a good candidate, well, it's easier to say who's not a good candidate, and that is someone who was late on something last month, or someone who's currently behind on their mortgage or on their car note or something like that. If there's a pattern of this month you're late on this, last month you're late on something else, the month before that you were late on your student loans and so on, well then the issue is you have a budget problem, not a credit problem. And I can't help you with that. Short of hiring you and giving you a better job, there's not a lot I can do about your budget problem. Sometimes it's just people that chronically overspend. They had a bankruptcy, 3 or 4 or 5 years ago, and they got out of trouble, and then they immediately went out and opened a bunch of new credit cards and so on and so forth. I'm not really a big fan of taking those people on as clients simply because what they're very likely to do is screw up somehow during our process. And when we go and we do have all kinds of success removing erroneous information, outdated information, misreported information, but then they're late on their car note the very next month, well, their scores are not going to reflect the effort that we put in. Their scores are probably going to go down. And those are the kind of people that will then go out and say, oh, credit repair doesn't work, it's a scam. No, it actually worked brilliantly. You were the scam. You didn't pay your bills, and that's a big problem. So those are the people that we typically try to avoid. And those people, it could be an almost never-ending process. What we try to do is get everybody into and out of the system within about 4 months. That's what we're looking for.
Excellent. Thank you so much. It's great, great information, Doc. Thank you for sharing that. So so that we can stay a little bit on time, we're a little bit over, I'm going to take one more question. And the next question is from Gene. He asks, if I'm self-employed, can I still qualify for a loan? Michelle, can you help with that question?
Yes, if you are self-employed, you have to be self-employed for at least 2 years. We do require 2 years of the tax returns. Once I hear self-employment, I say, let me see those tax returns. We have to review them and analyze them. As a self-employed person, you're able to do a lot of write-offs that are perfectly legal and fine. When you're applying for a mortgage, we have to look and say, okay, you did this many deductions, so this is what your actual income that you claim to the IRS, and that's what you qualify off of. So a lot of my self-employed buyers, what I do is I analyze their returns, and if they do a lot of write-offs and we just don't have enough income to qualify, we kind of regroup, look at it, and maybe their next tax return, you might have to not have claim as many deductions and able to average that 2-year history so we can qualify for a loan. But yes, we just want to review your tax returns, but you do have to have a 2-year job history for self-employment.
Excellent. Thank you so much. Okay, well, thank you everyone for attending the webinar. I definitely appreciate it, and thank you to each of my guest speakers. You guys are each awesome, and I look forward to continued much success with you guys and continue to do business with you guys. To everyone listening, to receive a replay for this link, and this is my free gift. I promise you a free gift, and I'm going to deliver. So at the end of the webinar, you will receive a form to provide your name and email address, and I will send you a replay of this extremely informative webinar so that you can save and use it as a resource. So if you're just listening in, text your name and email address to 972-827-7589. That's 972-827-7589. And I will send you this replay. Thank you again, everyone, for attending and participating. So I wish you much success and God bless. Thank you.